Hey, what's up guys? Welcome back to DCA Kings. Today we're going to cover how to build a simple portfolio and trade plan that even beginners can follow. I'll keep it short and simple. We're going to break this into 3 parts. Building your own portfolio, creating a trade plan, using the right broker and order types. If you're totally new, remember to check out our other videos. When building a portfolio, think about your goal, your risk tolerance, your time horizon, and how involved you want to be. Most people use a mix of ETFs, stocks, maybe bonds, or just even a high-yield savings account. ETFs and stocks are identified by their ticker. For example, VOO is the S&P 500. Here's a few portfolio examples. 100% global with VT, or maybe mixes like VT and QQQ, or combos like DAX, SPYG, QQQ with some stocks and crypto. Pick whatever fits your goals regarding risk and time. When picking assets, risk and time are hard to define exactly, and different experts may have different opinions. I mostly just rely on data, looking at how long a pullback takes to recover and how deep it goes. Let's go through some examples here. Here on screen now we have VOO, or the S&P 500. As you can see, from 2000, it took 12 years to recover and it had a 50% drop. And now here we have QQQ. That represents tech. This drop here took 16 years to recover and it went down 80%. And now let's look at BTC. This one is harder to judge because of limited historical data, but the longest pullback has been about 3 years and it's been down at least 80%. This gives you a good sense of risk when you're buying an asset. If you buy BTC, could you stomach an 80% drop or would you panic sell? Let's move on to why you need a trade plan. It keeps you focused on your long-term goals. It tells you what you're buying, why, how much, and when to enter and exit. Without it, it's easy to panic sell. Here's a super good beginner example for a portfolio and trade plan. It's a 50-50 split between VT and QQQ. It bets on global economy plus tech growth. Buy 7,000 a year market and sell in 2045. DCA out, moving 10% into a high-yield savings account. If part of your portfolio grows a lot, you can take some profits. But for maximum gains, avoid selling and only adjust your buys. Here on screen, you have a simplified version of my own portfolio. The goal is 1.5 million, high risk tolerance, 10K invested per year, and the mix includes VT, SPYG, QQQ, BTC, and a stock basket with Google, Amazon, Nvidia, and more. I DCA yearly with an exit plan strategy starting around 2045. The free template you guys can find in the description. Use a reliable broker. I recommend Interactive Brokers. There are other good options out there, but be sure to do your research. Switching brokers is a hassle. I've been there. If your country offers tax advantage accounts, max them out. In the US, that's a Roth IRA. On the right side of the screen, you can see the most common accounts around the world. You should also know the 2 order types, market and limit orders. A market order executes right away. A limit order lets you set the price you want. Useful if something seems overvalued. But keep in mind, a limit order may never get filled. I personally use market orders for most of my ETFs and core positions, and limit orders only for volatile stocks and BTC. Let's walk here through some quick examples on Interactive Brokers. I always market buy at the beginning of the year according to my trade plan and portfolio composition. I allow up to maximum 10% in limit orders. If those don't get filled by the end of the year, I just need a market buy. Let's place some orders. Here I'll buy 1 share of QQQM at market. This is the same as QQQ, but just cheaper per share. Next, let's look at Nvidia. One of my rules when picking a stock is that the PE needs to be under 50. Check out our other stock picking video. Since it's above that, I won't buy now. I place a limit order. Over the past year, Nvidia has pulled back about 20% a few times. Also, around 150 has been a key level, so I'll set my limit order slightly above that at 152 and hope to catch a bounce. But remember, limit orders may never get filled. Here's a really nice example. A while back, I bought shares for Arista Network at around 94, and I left some limit orders open at 73, hoping it would pull back and bounce. But this never happened, and now the stock has run up parabolic about 40% and left me behind. That's why I often prefer market orders over limit orders. You don't miss the move. Here are some key takeaways you guys need to remember. Start as soon as possible, even with small amounts. Focus on ETFs first. They're low effort and they give solid returns. Always have a trade plan ready to remove emotions. Use market orders for your core positions and limit orders for volatile and overvalued picks. Most importantly, be consistent. Time will do the heavy lifting for you. That's it, guys. Comment below with your questions, and I'll see you guys in the next one.